Welcome back. Today, we are taking a deep dive into a semiconductor company that has taken investors on a wild roller coaster ride over the last 5 years. We are talking about Semtech Corporation, ticker symbol SMTC. If you looked at this company in 2021, you saw a high-flying hero of the Internet of Things. If you looked at it in 2023, you saw a company crushed by debt and bad timing. But if you look at the filings from 2025 and 2026, a new story is emerging. Is this beaten-down stock quietly becoming a critical player in the AI infrastructure boom? We have analyzed their annual reports from 2021 to 2025, and the latest quarterly filings from fiscal year 2026 to reconstruct this drama. This is not just about numbers. It is a story of strategic pivots, a massive acquisition that almost broke the company, and a frantic race to catch the AI wave. Let us rewind to fiscal year 2021 and 2022. The world was in the grip of the pandemic, but for Semtech, business was booming. Their stock hit an all-time high of over $90. Why? 2 words, LoRa and 5G. In the 2021 10K, the narrative was all about the Internet of Things. Their proprietary LoRa technology was being adopted globally for smart cities and tracking devices. The Helium network was exploding, driving massive demand for their chips. Revenue in fiscal 2022 grew to $740 million, a 24% jump. Margins were healthy, sitting comfortably above 60%. The company was debt-free and printing cash. It felt like nothing could go wrong. But then 2023 happened. This is where the plot twists. Management decided that just selling chips wasn't enough. They wanted to own the whole system. So they made a bold, some would say dangerous move. They acquired Sierra Wireless, a giant in AI modules, for $1.2 billion. The 2023 and 2024 filings reveal the immediate aftermath. Revenue doubled to nearly $1 billion. But the quality of that revenue changed. Gross margins collapsed from the mid-60s down to the late 40s because Sierra's hardware business is low margin. Worse, to fund this deal, Semtech took on massive debt just as interest rates started to skyrocket. Suddenly the narrative shifted from high-growth tech to survival. The 10K from this period reads like a damage report. Inventory gluts, slowing industrial demand, and interest payments eating up cash flow. The stock price crashed, losing nearly 80% of its value from the peak. Now let us fast forward to the turnaround. Fiscal year 2025 and 2026. A new CEO stepped in, and the strategy shifted again. The focus moved away from the slow-growing IoT business and toward the hottest sector on the planet, AI data centers. In the 2025 10K and the recent 2026 quarterly reports, we see a specific term appearing over and over, signal integrity. Here is the thesis. AI clusters like those built by Nvidia require massive amounts of data to move between chips at lightning speeds. Traditionally, you use optical fiber for this. But optical is expensive and power-hungry. Semtech is betting on a technology called active copper cable, or ACC. Their CopperEdge and Tri-Edge chips allow data centers to use cheaper copper cables for short distances without losing speed. So, what do the 2026 10Q filings tell us? Are they succeeding? The results are mixed but promising. In the third quarter of fiscal 2026, we see a clear divergence. The industrial and IoT segment, the legacy Sierra Wireless business, is still struggling with inventory corrections. Revenue there is flat to down. However, the infrastructure segment, which houses the AI data center products, is growing at a double-digit pace. The company reported strong demand for their 800 gigabit and 1.6 terabit products. They are effectively becoming a picks and shovels play for the AI build-out, providing the plumbing that connects thousands of GPUs. Financially, the picture is stabilizing. The reports show that they are aggressively paying down the debt that nearly killed them. Management has been selling off non-core assets to raise cash. Non-GAAP gross margins are slowly creeping back up towards 50%. Although they are still far from the glory days of 2021, one critical risk factor mentioned in the 2026 filings is customer concentration. A significant portion of their high-growth data center revenue comes from a few key module makers and hyperscalers. If the AI spending bubble bursts, Semtech's recovery engine stalls. In conclusion, Semtech in 2026 is a fundamentally different company than it was in 2021. It is no longer just a LoRa company. It is a hybrid. Half of it is a slow growth, cash-generating IoT utility, Sierra Wireless, and the other half is a hyper-growth, high-stakes bet on AI connectivity. For investors, the question is simple. Do you believe that copper cables will play a major role in the AI data center? If yes, Semtech is undervalued. If you think the future is all optical, then the headwinds remain strong. The filings show a company that has survived the storm, repaired its ship, and is now trying to catch the biggest wind in technology history.